Hey guys, it's Ken. So in this video, it's going to be about the principles of your real estate foundation. These are very important principles. And ironically, this is exactly how I got connected to Robert Kiyosaki reading Rich Dad, Poor Dad. One of the things that happened in my very first meeting with Robert was I was actually raising money from him and Kim for a real estate deal. And somebody said, hey, he wrote this book, Rich Dad, Poor Dad. Now, of course, this is going on 20 years ago. But I read it before I met him. And one of the things that he discussed in Rich Dad, Poor Dad is exactly the way I think, and I believe, the foundation for real estate principles. So it's a very simple concept, but most people don't follow it. And that is, it's cash flow versus capital gains. Now, I know this sounds super simple, but it's very hard to do this. Most people focus here on real estate. The way they think about it is much like a stock. So in other words, I'm going to buy it and I'm going to sell it for more. I'm going to buy it and I'm going to sell it for more. There's TV shows on this, on house flipping. Essentially, that's a capital gain strategy. Now, even I fell into this mistake. So back in the early 2000s, I bought almost 2,000 condominium units. And at the end of selling them all, which was a capital gain strategy, I owned no real estate because I had bought a bunch of condos and then I sold them later for a profit, yes. And so I made a bunch of money, but I paid a bunch of tax and I didn't own anything at the end. And the problem with the capital gain strategy is it's not a long-term investment strategy. We talk a lot about cash flow at kenmcElroy.com, and there's videos on this subject alone, on how to buy for cash flow and buy for the long term. But what we're really trying to do here is not have a lot of work over and over and over. You see, when I bought all those condominiums, I had to start again. So I had no real estate assets at the end of selling all of these, and then I had to do it again. And luckily, the market cycle was still there, but it's possible that it won't be. So this is a timing issue. And you guys all know what has happened during the last crash with all the banking. Primarily, that was because of this. If people bought on cash flow, they would have been fine. So let me explain what I mean by that. So if you buy where your expenses and your debt are lower than your income, then you're always going to be fine. In other words, the market can crash around you, but as long as you have a tenant or a resident that can pay for your real estate, you're going to be fine. But if you're trying to buy something and time the market and sell it at a higher price, the risks are much, much higher. You might do it. But keep in mind, you have to time the market perfectly. You have to sell it for more than you bought it for. And a lot of times, you're putting capital into it. You have real estate commissions, and you're definitely going to have tax, for sure. So you really have to capitalize, and you really have to calculate on exactly what that means. The other issue you have, of course, is that you have to do it again. Here, when you find something that cash flows, you keep it for a long period of time, and then you just continue to accumulate and you move off of the cash flow. So years ago, I convinced my sister to do this in Seattle, Washington, and she now has 10 rentals. And she called me the other day, and she now has a property that's cash flowing $2,700 a month. And she has multiple properties, and she's now financially free. And my sister is a medical billing director at a local doctor's office. So, she doesn't make a ton of money, but her and her husband have done this now for a living. And now they're financially free on their real estate holdings that they have. And it's because it's based on a cash flow model. Once you find real estate that cash flows, the last thing you want to do is sell it. You do not want to sell it for a capital gain strategy, because now you're sitting on a bunch of money and you got to reinvest it. And this is exactly how everybody got wiped out in the last crisis. Thanks for watching. We'll see you in the next video where we're going to talk about finding your very first deal. And don't forget to download your action notes below.